Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need for the next 24 hours and hopefully the next few days. Today is Tuesday, May 9th, and we are one day away from the much anticipated CPI print that is coming up tomorrow, May 10th at 8:30 a.m. If you've listened to the show at all, we typically like to focus on the core. Typically, year over year is where I look, but CPI is projected to come in flat, and core CPI is projected to come in slightly lower. So basically, we want to see, I think, less than 5% is what we want to see from CPI, and 5.5% or less is what we want to see from core. The reason we want to see less than 5, although it is the projected, is we want to see inflation coming down. If inflation's flat, that's not very good. I mean, it's, better than higher, but it's not, really positive in the grand scheme of things. So we want to see this lower. We want to see 5.5 or less. If we get those numbers, market should increase, meaning move higher. If we do not get those numbers, meaning, we get higher than expected, market should move lower. So looking at DXY, it's held very strong off the lows, pretty much one of the uglier 12-hour candles I've seen, and it somehow still survived the 101 level. So still hovering around in this area that we've been hovering for quite some time, dating all the way back to early April. And I have a feeling that we're going to get an extreme move. This was right around FOMC, and CPI is tomorrow, as well as PPI after that. So we should get some volatility out of this, which should translate into some wonkiness for risk assets. So looking at equities, surprisingly standing tall after a big drop late last week, recovered very well into Friday, and has just been seeping a little bit lower to start the week. So moral of the story here is, the 1 hour estimated 200 moving average is holding support at about 41.20. Hold 41.20, climb back up to 41.45 and potentially break up on a good CPI print. If CPI is bad, then maybe we're seeping, just continually lower down to 41.11. And if we break 41.11, we will head down to 40.90. And obviously, if we lose 40.90, headed back down to around 40.60 or potentially to meet these equal lows before recovering, or obviously heading down further. So looking at Bitcoin, let's actually zoom into the 1 hour, get a bit better review here. Where's, oh, now I see. Okie dokie. So let's go ahead and get this much better in view. So Bitcoin has been obviously moving lower ever since Sunday. Pretty ugly volatility here. Obviously was rejected at the VWAP this morning, headed lower. I thought we would really try and retake these lows at the very least this morning, but obviously still holding strong. Doesn't mean we still can't take the lows, but seeing price hold up down here at the 27.3 level, definitely something to take notice of. But of course, if it climbs back up to 27.5 and fails again, it'll definitely sweep these lows. So if we end up, getting rejected at 27.5, we'll come back to 27.2. If we lose 27.2, headed down to 26.6. And then obviously, if we can climb back above 21.5, which was kind of the prime number this morning, then we can then reattack the VWAP and potentially, 28K. So we need to get above 25K and then flip the VWAP to then head to 28K. Else we are going to be stuck under 27.5, seeping lower, at least resweep those lows before potentially trying to climb back up to 27.8, right around the VWAP, or failing down here at 27.2 and, moving lower to 27.6. Just to give you a bit better of a wider look is, we are, we're still above the lows from late April, but we have not tagged the lows from mid to late March. So the lows from mid to late March are that 26.6 number. Obviously, if we break that number, we are pretty much guaranteed to head near 25K. So moral of the story is, we want to hold this range to then have a chance to end up moving higher back towards 28. If we continually drop lower, the best case scenario is sweeping these lows and recovering at the 27.2, maybe 27K flat number. Obviously, if we lose 27K flat, we just continually drop lower down to the next support level, 26.6. Looking at Ethereum, I will say, and where's the chart, ETH BTC has been performing a lot better, but we are getting into an area where you would expect price to start to calm down anytime you are, battling back into this range. So we could do, maybe something like this. We could still, obviously hold that, but once you start getting up here, you're going to start seeing some sells come in. And if we just kind of compare this to Bitcoin's price action, remember, this on Bitcoin looks very similar to what we're seeing here on ETH BTC. And if you look what happened, we ended up, taking out this, dropping lower, sweeping the high again before dropping lower. So if we think about it here, we could, definitely move up higher, drop a little bit lower, maybe sweep back up, and then moving back lower. That's pretty much exactly what this formation did. Does not mean it even needs to come back up here. It could definitely get rejected here and just move lower, but something to keep in mind if you are tracking ETH BTC in the grand scheme of things. So looking at ETH itself, obviously just crabbing around in this. Why can't I, what's going on here? There we go. Okay. So obviously ETH is just crabbing around here as it has been. It hasn't moved too much since Monday open. Where was Monday open? Right around here. Right here. So this was the Monday open right here. And look where price is. And this is where we closed yesterday. So we closed pretty much right where we opened, just crabbing lower. Moral of the story for me for ETH is we need to get above the VWAP, and then you can start to reattack this 1880 number. Obviously, get above that, then you're starting to attack the 1945 number again. And if we zoom out a little bit, if we, so we do have these lows down here. Oh, that's bad. That's a bad circle. So we do have these lows here to sweep if we do break below the 1845 number. So we do something like that, potentially down to 1810, maybe 1800 at the lowest, talking about this wick down here. But obviously, if we lose that 1800 number, pretty much going to rocket down to the, around 1706, 1700 level, which coincides with the highs from this area, the lows from this area, and then obviously this giant deviation, which we had a bunch of volatility underneath. So, no clear picture right now, but we do obviously have CPI tomorrow, which will give us some volatility, meaning, I'm expecting to just run it back to the numbers again. If, CPI is under 5%, we move higher. If CPI is 5% or higher, we move lower. Core CPI, 5.5% or lower, we move higher. 5.5% or 5.6% or higher, we move lower. So the market may immediately react to CPI. We do see this a lot, but core is really what's going to define the momentum. So whatever initial reaction you see is likely due to the CPI number. Whatever momentum and solid directionality you see after the announcement will likely be because of core. So if you see prices rise because CPI dropped, but core is above 5.6, then I'm probably fading that rally in my opinion. Because, core is really what matters in the grand scheme of things, because that's what the Fed closely tracks. So right now, there's no, clear read on what's going on, but, crypto is continually just seeping lower. And I think that's something that has to be respected. We're obviously, sitting at these lows, and I don't think you should just indiscriminately short, but if we do break beneath the local lows from yesterday for both Bitcoin and Ethereum, then I'm starting to add a short. Now, probably if Ethereum breaks through 1845, I'm probably adding a short at least down to 1810, 1800. But for Bitcoin, probably want to see it more or less break this low before entering, just to be on a little bit of the safer side. And obviously, crypto and equities have not been playing or not been trading in tandem together. But if any sort of large volatility occurs from the risk perspective, meaning CPI is a crazy miss or a crazy beat, both of those are going to translate to crypto and equities. And still, in my opinion, I do think if we see any large moves from equities, such as something like this, then, I think crypto will likely, follow that trajectory to some degree as well. Although the correlation, of course, is not very solid. So I am not terribly bullish. I'm not really bullish or bearish. I think everything is going to depend on CPI, and obviously the predictions are not super positive right now, but they're still in the right direction. So that's exactly, we want to see things heading in the right direction. If that's the case, the market will react positively. If things aren't headed in the right direction, the market will react negatively. So no clear read today. I think everybody can kind of more or less take a break from trading and wait until CPI presents itself. And then we should have some really good volatility. And of course, we know what to expect in terms of reaction. It's just going to come down to what exactly the number is tomorrow morning. So good luck, happy trading, and make sure to keep your alerts on for the CPI print at 8:30 a.m. Eastern. Of course, we will have PPI the following day. We'll cover, those predictions, those numbers. That'll be another volatile event. I think less volatile than CPI, but still very significant. So good luck. Happy trading. See everybody soon.